The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we welcome back our good friend Lawrence Wintermeyer, former CEO of Innovate Finance. Lawrence now works with a range of institutional investors and companies to help them capitalize on the shifts underway as part of the digital revolution. Lately, he's doing a lot of work in the cryptocurrency and token space, the topic we pick up today. We also connect with Oliver Oram, founder of Chainvine, a blockchain company, and lead advisor to MindArk, a video game developer preparing an ICO. We get into some of the higher level developments in the crypto space with Lawrence and dig into a specific ICO use case with Oliver in the second half of the show. It feels like we're in the middle of a hurricane in the crypto space, with prices blowing in all directions while the underlying technological and social components struggle to take hold. Crypto is one of the most fascinating topics out there right now, and you're bound to have views. Let us know what you think. Tweet at us at Rebank Podcast, Lawrence at L. Wintermeyer, and Oliver at ONO UKSV. Thank you very much for joining us today. Please welcome Lawrence Wintermeyer and Oliver Oram. Lawrence, welcome to Rebank.
Delighted to be here.
Good to have you back.
And lovely to be back.
So you're doing a lot of work since you've left your position as CEO of Innovate Finance a few months ago. Been doing a lot of work in the cryptocurrency space. Can you just kind of high level paint the picture? What's your view on the current state of the crypto space?
Well, if we can put the Bitcoin show aside for a minute, which has definitely been volatile, and including with the introduction of the managed futures market for Bitcoin. Broadly, the crypto or digital currency asset market is about 300 billion growing. The ICO, the initial coin offering or token sale space in 2017 is, I think, clocking up to about 4 billion globally. And things are moving so quickly that these numbers are probably even out of date. And so I think our conclusion is, look, this isn't going to go away. It's an important part of the digital future. However, Bitcoin is a very good example of how something that is an alternative asset class, or as the SEC in the US classify it as a security, with a limited supply, where there is a great global demand, looks as if it's in an asset bubble, or looks as if it's speculatively getting out of control. And so I think the current issue with global regulators everywhere in the world is the retail exposure to that. And people aren't really too concerned if institutions are winning or losing on alternative assets or managed futures. But when retail clients don't understand the risk, particularly of speculative investments, that becomes a problem. And it certainly becomes a problem if they're leveraging or borrowing money in order to buy into things. And so I think that is a story that really is going to unfold over the coming weeks and months. But I think our overall view is digital assets are here to stay, as are digital currencies or cryptocurrencies. And so it's very important that we understand how to deal with them. And you and I have been speaking about this. There are many moves afoot around the world to introduce codes of conduct or ethical standards for issues or for providers. And I'm just, I'm a big fan of that, and, try to accelerate that, not just in our own community here in the UK, but anywhere in the world.
Mm-hmm. I feel like most people are of the view that, like you said, we're in a bubble. And at some point,
Bitcoin or with
Bitcoin,
cryptocurrencies.
Sure. Bitcoin and certain cryptocurrencies are bubbling. And at some point, we're going to to exit that bubble. And I think very, very rarely do asset price bubbles kind of deflate in controlled ways. Wouldn't necessarily expect that here. And so there are a number of concerns going forward, and not least, when are prices going to fall back? Assuming they fall back, what will the fallout of that be? Are there regulatory implications? Are there the retail investor loss implications? Are there likely to be potential lawsuits coming out of this? But I think what you're saying, and I would agree, is that the price on any given day of Bitcoin, whether or not a bubble exists and or bursts in Bitcoin, is only kind of one small piece of the larger digital currency, cryptocurrency story. And there may be some growing pains as we get through whatever may happen in the short to intermediate term. But looking long term, we're fundamentally talking about a new asset class supporting new ways of operating, supported by modern technologies and new digital experiences.
Yes, I do believe that, and I think that if you look through history is littered with bubbles with the introduction of new instruments, particularly new financial instruments. The history of currency, broadly is no different to Bitcoin in that we've had bubbles in the past. I think particularly with the experience we have in the UK. Our biggest concern is always in the retail market and people who really don't really appreciate the risk of what it is they're doing. But this is the world that we live in, and people can leverage and take exposures to Bitcoin. So the question is what's going to happen with that. And I think to your point, certainly my bias as an institutional investor is really a systematic risk-adjusted investor. I don't bet. I'm not big on speculating, but I've run lots of hedge before. And you're absolutely right. When a bubble bursts, or particularly when we're at the top of any long-term bull market, the acceleration rate on the downside is much greater than it ever was on the accumulation side and the upside. So that means people really tend to get hit hard. Bitcoin futures has opened up, and without getting into the complexities of what a future market is. The institutional view of it would be by offering futures, hopefully we'll get some better control over risk measures of volatility. But I think the thing we need to remember about Bitcoin is that there's a limited supply, and we're in a world of 8 billion people where 2 billion people are online, and there are a lot of people trading it. So there are some fundamental dynamics of supply-demand here that it's difficult for anyone to control.
Yep. Well, and I mean, look, we won't get lost in this. We could do an entire episode about Bitcoin specifically and the market dynamics, but things like transparency or lack thereof in Bitcoin. I mean, 2 billion people online, but how many people are actually actively investing in Bitcoin? Is it a very small number of people operating through a very small number of exchanges that are driving
who
price?
Who knows? The quants. Dave Birch, blasted a great piece I caught on Twitter saying out of the total volume of available Bitcoins that are out right now, a third are lost. A third are in the hands of a very small number of investors, and a third are out on the speculative market, and that's still at the rate of Bitcoin miners, basically coming into the money every 10 minutes on, hashing through the algorithm. So it's, it's kind of a bit complex, and, it doesn't work in the way that most liquid securities work. But again, this is something now that we've got a futures market in place. Hopefully we'll see a bit more stability, come to the market.
Mm-hmm. So there are a number of topics that I would like to get into with you. And I mean, maybe the first and most interesting place to start would be around ICOs outside the, if we can call them the more established platforms by this point, the Bitcoins and Ethereums of the world, and looking at token issues as a way of raising money to fund companies maybe that would have traditionally funded themselves through equity. You're involved in an ICO, which is prepping for launch for a company called MindArk out of Sweden. Can you tell us about that?
Well, I can. MindArk is a company that's been in the gaming world for a number of years with a virtual world called Entropia, with quite a bit of experience in digital currency, which they call PED, which has a US peg on 10 to 1. and all sorts of impressive records on the prices that have been paid for digital assets such as property, rare goods. And so what's interesting about it is that it's actually a mature company with top-line EBIT assets, but is very much focused on a utility coin in a way of as a means of attracting third-party developers or other partners to help expand its universe. So it's in the process of being designed right now, and I think you're going to catch up with Oliver Oram, who's the lead advisor on it. But it's just very interesting in that it isn't a startup; it's a mature company, and it's a company that has a vast amount of experience with digital assets. So it's definitely one to watch.
Yeah, great. Well, look forward to diving into the details of that with Oliver on the second half of this episode. I mean, maybe you and I can kind of stick with some of the meta pieces around that. So, I mean, we're talking about an ICO with MindArk here. We've referenced some of the regulatory and legal considerations that have been surfaced lately. I think just yesterday, at the time of recording, the head of the SEC published an open letter, effectively reiterating some of the warnings which have been floated previously. Retail investors, buyer beware. Issuers understand that the vast majority of these ICOs in the eyes of the SEC are securities issues and need to be regulated as such. And celebrities promoting ICOs are promoting securities, which is a regulated activity for which, of course, they would need requisite licenses, which they definitely don't have. So from the point of view of the company, right? So using an ICO as a way of raising capital, is there a legally and regulatorily sound way of going about an ICO issue at this point for a company, or is it just too confused?
Well, there's a perfectly legitimate way of going about it in the US with the SEC, which is that your token sale is a security, and here in Europe it is in essence an alternative asset class. So that's it, number one. There aren't any legal prohibitions. And I think, just interesting listening to you in that narrative and opening and thinking about the retail. The issue is with retail investors here. And again, I don't know many retail investors that are currency traders or do carry trades every day on whatever platforms they're using. So, that retail investors are jumping into things like Bitcoin or cryptocurrencies. This is a digital reality. It's because the friction is low and they get access to it. But typically it's actually, difficult for the average person on the street to go in and do a, US dollar euro trade. So the ICO market, I think, is quite similar, where in the UK we've got a reasonably rich tradition through tax incentives and EIS of having retail investors participate in venture. It isn't like that in many other places in the world. So we've got, tax structured investments to incentivize, and crowdsourcing here for equity has been huge. So there's certainly an appetite for retail investors here. And the reason I want to focus on retail is that, from my perspective, an ICO or venture really isn't a great retail space unless you know what you're doing. And so making sure that the appropriate information is available, or at least endeavors to communicate to retail investors the risk they're taking. And you and I know, Will, in venture, but boy, quite often venture is a binary investment. You either get something or you don't. And in the UK, if you don't get something, you get a tax break. So you've got a bit of hedge, or you're covered on the downside. The thing I like about ICOs or token sales is that I feel that from an institutional perspective, moving into what WEF calls the fourth industrial revolution, we have a sort of systematic problem in getting digital things funded. On one hand, after 2008 and zero interest rates and all sorts of liquidity, everybody is talking about the volume of capital sitting on the sidelines because it can't find yield. Private equity, you name it. We seem to not have enough investments on the planet anymore to deliver sufficient yield, whatever the appraisal for that return of capital is. And at the same time, we have, not just in fintech, but in digital, this huge upsurge of low-friction startups, entrepreneurs, people really wanting to create value in our economy, which is great, but we can only incentivize that through either venture capital or a limited capital distribution. And so where the ICO ultimately comes in handy is that for institutional or large portfolio investors, it gives them the option to take a very wide and diverse exposure to high-risk companies. And so my analog or go-to for thinking about this is a bit like the junk bond. And I think that was a really inspiring security in the late 70s and early 80s, because it allowed liquidity to get to companies that wouldn't be funded through capital markets. And so if we can focus a structured discussion on token sales, particularly from an institutional perspective, and solve that problem, have a code of conduct that abides by, particularly with token sales, transparency in the size of the issue, transparency in the distribution of the token, better transparency and rigor around the white paper, which is in essence the proxy for a prospectus and how things work. I think we'll get, and the after-sale market as well, I think we'll get a better quality participation. But I think the $64,000 question is, again, with my institutional hat on, how do we allow retail investors to take advantage of that? Because digital is about inclusion and participation. We want people to participate in these things, but quite often these retail trends are one of the big drivers for bubbles, and I think that's what we're seeing in Bitcoin.
Mm-hmm. So putting your Innovate Finance hat on, so as the former CEO, you were working to basically support the fintech startup community here in London. If you were talking to fintech startups, would you be thinking about an ICO as an attractive means of raising capital?
Well, it really depends on what it is you're doing. And so out of the almost 4 B of ICOs in 2017, a lot of them are in the utility space. And this is where things start to get a bit complex. And so what's a utility? Well, if you were developing an infrastructure, a platform, or any type of environment where you needed to incent participation outside of the normal dynamics of selling to customers and getting adoption, it would be a really good example. So again, we come back to MindArk. It's actually a digital universe, a virtual universe, where we're encouraging developers and other institutional parties to come in to expand the universe, expand the consumable assets in the universe, and in a certain way simulate or test the behavioral economics of things in a virtual universe. Well, that makes sense to me as much as developing any infrastructural utility that meets the requirement of the digital revolution. If you're a retail startup and in e-commerce, it's pretty difficult to see why you would not just do a normal equity raise. But again, I'm trying not to be the arbiter of discretion here. I think you really need to think about that. I think the most important thing about the promise of a token is that what you are doing is getting an alternative asset class rather than debt or equity in a fairly efficient way. If you can do it in to an open code of conduct that meets into institutional standards, you're getting a much larger pool of capital participating in digital quicker. And the importance of that, I think, is critical to getting a lot of digital to work, because most startups aren't going to succeed. I mean, many of them are going to fall by the wayside. Of those that succeed, the majority of them are going to go to trade sales of a multiple of 1 dot something, not terribly interesting, and then the 1 in the 100 might hit the ball out of the park and get a great trade sale or an IPO. Institutional investors can manage portfolios just like venture capital firms do to carry that risk and to make sure that they've got the diversity. And so, we keep hearing these terms smart beta. Well, smart beta is being able to make enough diversified investments across a particular asset class, or in this case, a selection of startups, to make sure that you're going to get a return on and meet your investment objectives on a portion of the the portfolio. And typically retail investors don't think that way. I mean, typically retail investors might have one or two or even a small basket of things, but they don't risk diversify in the way that institutions do. So the greater capital efficiency of that, I think, is probably the thing that I would point out that is one of the most important things for accelerating digital growth that I kind of get excited about.
I suppose this links nicely to one of the other kind of topics that I wanted to cover, which was around institutional investment appetite for cryptocurrencies. I think as you've pointed out, it was largely retail exposure early on. Certainly, very niche retail, basically miners and crypto anarchists. 2009 for the first maybe 4 years. The past maybe 2 years, we started to see more retail investor interest in cryptocurrency, and even more recently, institutional interest. I think a lot of the VCs I've talked to express philosophical interest in what's going on, don't think of themselves as cryptocurrency specialists, and therefore haven't taken positions in that sense. I think a lot of hedge funds and other maybe more speculative types of investors have certainly gotten involved in the crypto space, and often they've been doing it on a leveraged basis, which is kind of inherent in a lot of the fund structures that exist. So with your institutional investor hat on, is this a space that you would be actively getting involved in, and do you think it plays an important role in traditional concepts of portfolio diversification and access to different asset classes?
Yes, but it's early days. And so, until we get appropriate measures in place for risk, and we can actually measure things, it is, entirely speculative. But I think the growth, not just of cryptocurrencies, but of token sales, is the thing that we need to pay important attention to. And broadly, when you work through the institutional barriers of, again, around things of either code of conducts or risk measures or liquidity or access to, to instruments, if you can measure it and it looks like an alternative asset or a commodity or a managed future, you'll work out a way to trade it. And so I believe it's important. Will, I'm not big on betting again or predicting the future, but I think the trend on this one indicates that it's worth the time investing and understanding how these new securities work. We're at the early days of something that offers the promise of being pretty important. But overall, we need to get a lot of planets in alignment here. We need to get regulators need to come on side and understand what this is all about. Institutions need to get through their own institutional checklist of making sure that they understand the risk of what it is that they're putting in play. But I think the promise is pretty great. Again, as a means of, in a diversified way, getting investments into a larger pool of illiquid digital things. All at the bottom of the innovation curve. This is probably one of the more efficient ways I've seen of getting large amounts of capital in. So I think it's worth investigation, and there's certainly a lot of things going on in the world that are pretty interesting that you can stick to learn about this.
Well, I think it's an important message because in the same way that I think, particularly looking back, we wouldn't have said that circa 2000, as we're kind of staring at this .com bubble, okay, we might not immediately invest in tech stocks if we thought that bubble may have burst at some point, but the idea of turning our back on new technologies as a kind of directional guide to where the future is headed certainly wouldn't have made any sense. And I think what you're saying now is, whether or not there's a bubble in the cryptocurrencies at the moment or specific cryptocurrencies,
we need to recognize that that this is hugely transformational and likely will be for a long time to come.
Well, indeed, it has the opportunity to. So the size of Bitcoin theater is actually relatively small, by any categoric comparison of other asset classes, but it's in the paper every day. It's on it's on the business news. I mean, you just can't get away from it, and I think that just illustrates the concern of what happens with these sort of things. But it's early days, so I think in 10 years' time, if we were sitting down and having a podcast, around how successful cryptocurrencies or assets, where we'll be saying, do you remember 10 years ago when we were talking about the early Bitcoin bubbles? And again, we're in 2017, going into 2018, and boy, my own, I was running a startup, a big data startup, from 2011 forward, and I had a Chinese subsidiary, and the team was trading Bitcoin. Back then it was actually pretty big in my life.
They're probably mining it on their company computers at the point.
Yeah, exactly. using the capacity of my own working capital to mine. Yeah, I hope they weren't. But again, this isn't my first foray into it. It's gone public and mainstream now, so I think it's important. But I think your view is absolutely correct in that we need to bring some sensibility to these markets. Things will sort their way through, but you do not want to ignore this space if you're an institutional trader.
On the point of where this has all come from and the increasing institutional interest / involvement in the crypto space. I mean, tracing it back post 2008. So Satoshi's paper was published. I have to check my dates, but late 2008, 2009 time, and it was, I think, really philosophically motivated by some interventionist, politically and economically vested interests in the way that national monetary systems worked, and was very quickly held up as kind of an alternative to the broader financial system and a lot of the negative feelings that were rampant at the time, as people were feeling the direct negative consequences of the subprime crisis, Lehman blowing up, and all the rest. Now we basically come, I don't want to say full circle from that point, but we have institutional investors levering up, buying Bitcoin, extremely speculative instruments. I mean, it doesn't feel that dissimilar from, some of the securitization structures of 2005, 6, 7, which eventually led to those sorts of crashes, which then had contagion effects through to other asset classes in other parts of the world. Now, you made the very important point that in terms of scale, Bitcoin is microscopic compared to the broader the broader world of investable assets that institutional investors have exposure to. But in your view and with your experience, do you expect the likes of Bitcoin and other cryptocurrencies to be a standalone, uncorrelated asset class the way that people may have thought about them in the past? Or would you expect, with increased institutional investor involvement in cryptocurrencies, there to be increasing correlation between cryptocurrencies and traditional asset classes?
That's the best question anyone's asked me, I think, in weeks. Who knows? Too early to tell. Let's just unpick that. What's interesting for any fans of history, I think, in particular economic history, is that it seems most of the big change in society over certainly the last 2,000 years are born out of some sort of rebellious streak that we end up accepting over a period of time and becomes commonplace. So it looks to me, like the sort of, traditional social anthropological adoption curve. Wow, this is crazy. It's born out of the financial crisis. And isn't this going to be the, great leveler, low friction, non-fiat currency that, everyone in the world can trade? And so that in itself is interesting to me. I actually think money is pretty complex. I mean, it's an emotionally complex, and status-driven, topic in itself. And I mean, face it, we work with a lot of professionals, and most professionals don't even understand how, fiat currencies. And I'm certainly not claiming to be a currency expert, so I'm not sitting here claiming that I do. But out of for whatever reasons of the incentives of Bitcoin to come along and the brilliant madness of this thing that we're faced with today, ultimately we're getting to a point where we're seeing a bubble because we're getting signals of adoption. But one of the things I think that it's important at this juncture we don't make the mistake of is that it is a cryptocurrency. It is not a fiat currency. And so far be it for me to think that in 25 years from now, the world will be using Bitcoin to buy their bread and milk. But it's difficult for me, to really see that. Fiat currencies, things that are pegged and things that have at least a seemingly rational consensus in societies and sovereigns make sense to people, and people are really currencies about confidence at the point of consumption. Here, people actually have to believe that and even in the UK we don't even use currency as much these days. Everything's tap and go or cards. It's the confidence that the government puts behind it, in that when we pay a pound for something that we're getting relative value, and the psychological process of working that out is quite complex, but you and I know what it is. You get to a cryptocurrency and you look at the values of cryptocurrencies, and why are they as high or as volatile as they are? It's the demand, it's the speculative demand, because it's trading like a derivative or an alternative asset class. And again, I don't think people understand that. I mean, most people, myself included, have a difficult enough time looking at my mortgage calculation. So I think we just need to put aside how things start with general adoption and utility and what makes sense for people. So I think the dilemma and the challenge for cryptocurrencies as we go forward is, do they offer utility or use? And certainly in an alternative asset class or in a derivative class, even as a derivative security, they certainly do, just as junk bonds did. But we didn't see retail investors pile into junk bonds in the 80s, mainly in that they would never be able to get access to them anyway. But there's a time and a place or a utility for everything. I think from a retail perspective, the benefit of either a token sale or cryptocurrencies is once they've reached an adoption point and have some sort of institutional backing, which says, yes, I understand the risk, I understand the underlying value, I understand what this is that I'm using. If we get to that point, then we'll see, a wider spread or more ubiquity in the adoption. But this is the journey we're facing in the digital world. Low friction, low barriers to entry for consumers on almost everything, whether that's information to currency, advertising and social media. And broadly, it's all moving much quicker than anybody, regulators or even people in society can adopt. So this is the big challenge, really, with the digital genie that's out of the bottle, isn't it? How do we sociologically sort of cope with all of this change that's going on? So too early to tell, but. Digital currency, I feel, has a huge role to play. My guidance for the Bank of England is get rid of cash. We don't use it anyway. I'm not even sure what we need cash for. I'm sure somebody will start dropping me emails tomorrow and give me a long list of things we need cash for. But, we tap and go here. I don't even know people really in many communities that even use cash these days. So, but that is a fiat, an asset-backed currency. And, it just happens to be, generally plastic, or our mobile phones that we're using as the medium to transact it. So I'm not sure anyone would have thought 20 or 25 years ago that when it got to 2017, we would have evolved there. So let's wait and see and keep our eye on this.
Yeah. Well, for me, the biggest takeaway from this conversation and more broadly everything that we're witnessing right now in the crypto space is the point we were making before. This is more than likely the advent of a meaningful change to the way that technology works, the world works. The economics textbooks may be rewritten as we move forward, because of the distributed nature of things, the auditable, decentralized, non-intermediated structures that we now have to manage the flows of information, of value, of all sorts of important pieces of information, knowledge, and assets, and what the price of Bitcoin or Ethereum or Litecoin or Monero or list goes on and on may be right now versus what it may be tomorrow is less relevant than the what will I think in all likelihood be uninterrupted development of these new types of technologies and means of exchange going forward.
It's big.
It is big. It is big, in a word. Lawrence, what's the best way for people to find out more about what you're up to at this point and connect with you?
Right. Well, I've just soft launched the new company that I've set up called Ellipsis. We're particularly focused on research advisory and investment management, and how to, in a convenient way to this discussion, how to best connect institutions to digital investments, whether that's illiquid startup investments or liquid portfolios. So they can drop me a note at lawrence@ellipsis.co or contact you, Will, and I'll get all of the details so that you can put them up on your website.
Excellent. Well, tweet at us both. Let us know what your views are at Rebank Podcast, and Lawrence on Twitter?
L. Wintermeyer.
L. Wintermeyer. All right. Lawrence Wintermeyer, thank you very much for joining us today.
Always a pleasure, Will. Thank you.
Oliver, welcome to Rebank.
Thanks, Will. Pleasure.
Yeah, so great to connect with you. Lawrence Wintermeyer and I went into a fair bit of detail on the broader cryptocurrency space, what's going on there right now, to an extent, when an ICO, initial coin offering, makes sense as a funding mechanism for a startup, maybe when it doesn't. And then we kind of touched on some of the considerations around legal and regulatory pieces to make sure that any coin offering is indeed suitable for both the issuer and investors. Now, I understand that you are the lead advisor on the MindArk ICO, which Lawrence mentioned. Can you tell us a bit about that?
Yeah, sure. So we'll actually run a blockchain. I've been running a blockchain technology company now for about 3 years called Chainvine. And basically, as CEO there, what we've been doing is digitizing physical commodities, basically, in the supply chain and for trade and finance. I happen to know the guys at MindArk because I lived in a small city in Sweden for a number of years called Gothenburg, which has a lot of quite large companies like Volvo, Stena and SKF that are quite global, and also they're home to this massive multiplayer online game called MindArk. So I happen to know one of the management team there. They came to me a few months ago, and it was more about someone actually saying that they said you should build a blockchain in your internal system to record all of your assets and replace your internal currency that you have now. And I said to the guys basically that perhaps building a blockchain is a bit extreme at the moment, at least for one game. And so from there on in, they asked me if I would advise the board on how is the best way to sort of jump into the cryptocurrency and blockchain space, as they'd been working with digital currencies for about 17 years, but they wanted to actually move forward, and they thought that using cryptocurrencies, or they believed that using cryptocurrencies is the best way to move forward and adapting the blockchain technology.
So Lawrence explained very quickly what MindArk does. I understand they've got a very successful video game, basically, which is kind of composed of its own universe, which has its own digital assets, digital currency, making it kind of a precursor, in a sense, to, I guess, a lot of what's going on in the cryptocurrency space. Can you just describe, for context, why MindArk is interested in crypto?
Sure. So they've been dealing in digital assets, I suppose, for about 17 years now. And so I mean, when they said to me, "Would you mind advising a universe?" I said yes. First of all, because of what they have is at the moment a real economy. It's fair and transparent, and it actually creates business inside that universe for many people. And I can go into some of what they've done later on, but one of the pain points they've actually had has been around KYC and AML. And the problem has always been that when you pay money in via maybe PayPal or credit cards, you pay money into their system and it goes to their real cash economy, which is called the PED, which has been, pegged to the US dollar for the last 15 years. Now, that's all well and good. The players can put their money in almost immediately, and then they can start buying PEDs, and they can go and do whatever they do in the MindArk universe. And one of the guys there explains it a lot better, but they can do different jobs such as hunting or mining. What's always attracted their players is that because it's a real cash economy, they can take this money back out, so they can convert the PED back to US dollars or pounds or whatever they put it into. Now, the problem here is actually that they've had a problem due to KYC and AML. They've had to wait almost 45 days sometimes to take that money back out. And the players have essentially thought that this is not the best thing, actually, to wait 45 days to take your money back out of system if you can put your money in one day. But obviously, you and I both know that by putting your money into a system, maybe some bad things could happen if you allow people to take out the money quickly with no true identity of the individual or who the money is passing hands to. So actually, they were using cryptocurrency not for its anonymous features, but for the blockchain features that allow many of the transactions to be tracked and traced once you know where they've begun and who begun them.
Okay. So just for very basic context for people who aren't familiar with MindArk or their universe, can you just describe it?
Yeah, sure. So MindArk is actually the holding company, the company that runs the Entropia universe. And this is a massive multiplayer online game. Players can go onto this game and they can actually start businesses within the universe. So I think David, who's vice chairman now at MindArk, was telling me that somebody had been actually bought a planet and then was leasing out deeds to the planet. So they were actually leasing out virtual land where people could come and set up their own companies. So I suppose what it is it's a massive virtual world where you can do pretty much anything you want and make money.
So how is MindArk going about their ICO? So there are all sorts of considerations. You know, the likes of the SEC has kind of raised some, not necessarily raised flags, but communicated to the broader market that people need to be careful about the way that they go about registering coin offerings, if indeed they're likely to be classified as securities listings. So how are you, as the lead advisor, working with MindArk to make sure that this does what it needs to for them and for investors?
Yeah, that's a good question. So I suppose when I first started advising the board, I said the first thing you need to do is take, first of all, a handful of technologists who are proven to have working in the blockchain and cryptocurrency space. So I insisted really that if they were going to do this, that they actually had someone who was actually qualified to deal with the smart contracts and who had at least a few years experience in cryptocurrencies and indeed the securitization of those cryptocurrencies through digital wallets and keeping that secure. So that was my first step. I said, you have to have the right tech guys with you. So I gave them a list of people that in my book I thought were some of the best out there in Europe, US, and the wider world. They followed that advice, so that was good. Going on from that, what I said was really important was to listen actually to what the regulators were saying. And they have listened to what the regulators are saying. They've taken, I believe, over 20 calls with different legal firms all over the world. I believe now they've established the legal firm they want. The reason why they did that was because they really wanted somebody who had experience in this And they wanted somebody with experience with the regulator, and they understood that you have to do this in a proper way. You can't be seen to just going out there and doing a massive money grab. They've got very long-term future plans. Other than that, I gave them advice to bring in a team to actually make sure their strategic vision was going to last over the years. And that was a team in London, Croxy & Co., who are very good, and they've been helping the MindArk team actually set out a vision into this new landscape and territory that not much of us actually know a huge amount about it at the moment. Because one bit of advice I did give them at the beginning was this: if somebody calls themselves an expert in this territory, run away.
Pretty good advice. Okay, so what will the token do initially? What will it be used for?
Initially, the deep token will be used as a way for players to go in and buy some PED, and then also take the PED back out.
So they will basically do the KYC piece on an exchange prior to buying the token. And therefore, by virtue of owning the token, they've already been KYC'd, and they can then very quickly exchange that back and forth.
Yeah, in and out of the game. And one good thing that I should mention, I mean, they've been doing KYC themselves for about 15 years.
For those who aren't intimately familiar with ICOs, with tokens more broadly, I assume this is being built on the Ethereum blockchain?
That's correct, yeah. At the moment, for the moment it's the Ethereum blockchain, but the chief scientist involved has said, it's possible to move away from that in the future. We noticed new protocols being made, and we're looking at those as well.
Okay, so basically using smart contracts on the Ethereum blockchain, MindArk is creating a token which it will sell in this initial coin offering in exchange for what, Bitcoin and Ether? How will someone subscribe in the quote-unquote primary offering?
There's about 3 stages of it, and they are not closing the door to any investor, whether or not they have Bitcoin, Ether, or indeed fiat cash. In fact, they have been in talks with institutional investors here, and they said they'd rather come in on the fiat side of it. So they've kept the offering pretty wide there in terms of that, but yeah, we'll be open to Ether and Bitcoin.
Okay, so someone basically exchanges their Bitcoin into this new token, and the new token has value because players of the MindArk game will need to use that token to buy PED.
That's correct. I mean, and also what we're looking at is there's two more stages after that, really. So we just see the initial use of a deep token for a smart contract as being a clever way. What would we call it? Advanced KYC AML in this case.
Okay, and then the subsequent phases where potentially that token becomes more deeply embedded in the actual game itself, are those defined, or is that kind of a potential for future development?
Yeah, so the stages are, which is the reason actually it's called a deep token, is because they want to open up their platform very much. So they have about 4 other different types of deep technology on the platform at the moment: AI, machine learning, augmented reality, and virtual reality. And what they've realized is that they have planet partners at the moment, but by using deep token, people can use that actually to build their own planets as well, and use the deep token to access these, we could call them development kits, if you like. So they're using deep token as an exchange for IP, if you like, intellectual property, to build their own planets. And on those planets, they can either build a game or maybe they're going to do a virtual simulator. It could be an enterprise company. So this is where it gets very interesting, in the fact that you have this kind of virtual hyper accelerator where game developers and enterprise developers can come and build their own planets and simulations. And then they can actually license those planets or simulations out for other companies to use or get engaged with. And I think one good example of another company that I haven't seen any other companies that are capable of doing it, apart from one that is called Improbable. And I think they went out and raised about $500 million in VC money, and they're still working on the core product at the moment. But all of this, all of these worlds, they take a lot of money to build, and it can be very time consuming and intensive. And what the deep token aims to do through smart contracts is to actually release a lot of this IP in form of AI and machine learning through basically smart licensing, if you like.
So one of the, I guess, the initial benefits for MindArk is that they would stop relying on payment processors to basically collect payments in fiat currency and exchange that into PED.
Yeah.
By going via their own Ethereum platform-based token, they can basically go direct.
Yeah, I believe that is one of the main points here. I mean, we have to have all different types of payment providers at the moment, but it's not just MindArk that suffers from having a whole host of different payment providers. I've spoken to other companies about this, and they're looking exactly the same way to try and circumvent all of these payments they have to make. And as the merchant mainly, merchants mainly get hit for these different payment services and providers because they all charge different fees. So if you can have one service, why not?
Kind of stepping back slightly, that MindArk example is a very interesting case study. You, given your work in the blockchain and cryptocurrency space, must come across a lot of interesting ideas about how tokens can kind of change for the better the way that existing companies, be they online companies, be they offline companies, do what they do. Are there any, I don't know, high-level kind of classifications that you use, mental models in terms of where tokens can be most relevant for existing companies, and perhaps even how you would expect tokens to influence business models going forward?
Yeah, so I think KYC is perhaps an identity is the hugest problem for companies, be those financial or merchants at the moment. So I was actually on a panel last week in London, and with a few other people in this space, the blockchain space and crypto space, and we were particularly talking about the cost of KYC. And as one of the other things I do, I advise the central bank governors of Africa in a smart think tank in London. And, they told me, what is it about this cryptocurrencies is good? What is it about blockchain that's good? Because all we hear is like, Bitcoin is this and people do bad things with it and blah, blah, blah. And I said to them, well, in terms of the technology itself, it can't replace trust, but it can reduce the cost of trust. What do I mean by that? I mean, if you look at KYC at the moment for private individuals and corporates, it costs a huge amount of money, and it's very time-consuming and painful in many ways. I mean, you've probably done it yourself, where you've had to go into a bank maybe, and you're all ready to do something, and you're just missing one key piece of ID or a letter, and they say, no, sorry, you're going to have to come back and start all over again. Now, if you bump that up to a company or a corporate level, that's when things get a little bit expensive and time-consuming, because the time is essentially money for most of us. There's no,
in my experience, clarity of understanding when it comes to KYC, AML, and cryptocurrency, because, and I think you alluded to this with some of the questions you were getting from the African representatives. On one hand, you have this sense that, dating back to the Silk Road, Bitcoin is basically the currency for those who want to launder money, do nefarious things, and it's in fact a way for them to get away with it. Of course, Silk Road got busted and people went to jail, which would suggest that's not necessarily the case. But on the other hand, you have people talking about how cryptocurrency potentially solves the KYC and AML problem. What's the truth behind those two different ways of thinking, or is it perhaps somewhere in the middle?
I think it's all really about process and the implementation of the process, Will. So this draws me back again to MindArk. They've had a KYC process in place for a long time. Why do they want to use the cryptocurrency? Because if you think about it, once they start adapting it into the process that they know very well and using it as a way to track and trace all of the transactions, within their ecosystem and in the future outside of their main ecosystem. It's a perfect way to sort of wind back a derivative or go back and say, so for example, perhaps somebody on their platform has created a piece of IP. And at the moment, there's no real, well, when did they upload that? When did they do that? If we're using a sort of cryptocurrency-backed smart contract system, we can pretty much track and trace and know exactly when they did what and how they did it.
Okay, so it's as much the auditability component that's kind of inbuilt on this blockchain-based cryptocurrency.
Correct, and I wouldn't say that Bitcoin is that anonymous. I think a lot of people say Bitcoin is anonymous, but I mean, I'm not sure I would be if I was a bad player trying to go around using Bitcoin to do all my activity in a bad way. I just don't think.
I guess you'd use Zcash or Monero or something.
Well, I mean, yeah, Monero, Zcash, but I mean, still, I mean, we all need digital devices in order to use these things, and I probably wouldn't go down the digital route so much. You're going to have people dealing with each other anonymously, but that can be done just as easily with physical goods these days, I would say.
Yeah, no, fair enough. And I think that's probably an important point to keep in mind anytime you're considering new technology. You know, everything from the way that the public reacts to biometrics, and are there, security issues with biometrics? Are there potentially holes in authentication or verification? Potentially, but does that make it worse than a four-digit password that you write down and stick to your computer? There can be very meaningful advances in security, even if they don't necessarily take you to a perfect certainty around security. It's still better than the existing option.
Yeah, I say that security is always every time somebody builds something really secure, everyone wants to be the first one to say, actually, it's not that secure. I'm going to poke holes in it, because if what we do know is by nature is nothing can be 100%. Like this is also one thing I always say with when people say that it's 100% immutable blockchain, and I just say that's kind of the wrong thing to say about this. Nothing is immutable because we're involved as humans, and not to be anti-human, but yeah, as long as we get in there, then there can always be mistakes. But I suppose by using these digital currencies and cryptocurrencies, what we can do is find those mistakes a lot faster and probably root out the bad guys a lot faster than we could in the old fiat world, if you like.
Wow. It's a fascinating time. Yeah. Oliver, what's the best way for people to connect with you and find out more about the projects you're working on?
Well, I'm available through Chainvine. I'm available. I've got quite a few social media links up, and I can send some over to you, Will. And really, I just say to people, anytime you want to reach out, please reach out, because especially in the technology space, the best thing is, like, if we put all of our minds together, we'll probably get to this better place than we are at the moment, quicker. And that's one great thing about what we're working with at the moment, cryptocurrencies, transferring things, and the communication of what we do. So, yeah, I'm available. I've got my public profiles. Always happy for people to reach out. Great.
Oliver Oram, thank you very much for joining us today.
Well, it's been a real pleasure. And any further questions, always ping them over to me. Thanks very much.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.